Bitcoin retreating from record highs. This is all about Bitcoin, a show dedicated to all things questions and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network, a collective journey to understand, apply, and use this innovation. All Bitcoin, all the time. I'm your host, Christine Lee, and after touching a new all-time high over $58,300 Saturday, traders are starting, or rather Sunday, traders are starting the work week taking profit. Bitcoin dropping over 15% this morning, below $50,000 before rebounding somewhat. The XBX Bitcoin price now trading at about 53,600. It's been down almost, well, just about 8% over the past 24 hours. According to trade block data, the XBX has been the most reliable Bitcoin reference price for institutions since 2014, with billions in assets under management benchmarked against it. Bitcoin is still up, though, about 80% year to date. Now, Bitcoin is often championed as an alternative financial system independent from central bank or government control. But as Bitcoin's price and popularity rise, so too does innovation in central bank digital currencies. Joining me now to discuss is Jim Kuna, Senior Vice President of Secure Payments and FinTech at the Federal Reserve Bank of Boston. Welcome, Jim.
Great. Thanks for having me. Happy afternoon.
Happy afternoon. Well, Jim, we know that the Boston Fed is working on a digital dollar in partnership with MIT, so I'm curious to understand if you think a digital dollar will exist side by side Bitcoin, or will government measures eventually restrict the use of Bitcoin once a digital dollar emerges?
Well, in the U.S., currently, the Fed does not have the authority to limit any private digital currency. So right now, that's not even within the scope of our powers. Now, Congress could also take different steps, but I don't see any reason why there can't be a coexistence of a central bank digital currency in many of the forms of payment, traditional payment rails in the U.S., but also cryptocurrencies. It really just depends on the individual currencies and how they operate. But I see no reason that a lack of coexistence shouldn't exist.
In late
in more of a retail space, but also in like a stable coin or more of a wholesale space as well.
Right. In late August, CoinDesk reported that the Boston Fed is exploring more than 30 different blockchain networks for the digital dollar project. Could you tell us details of what underlying architecture is gaining favor, whether that be a Fed-controlled centralized ledger or multi-party distributed ledger model?
Yeah, so the main thing we're doing is really technology research with MIT's Digital Currency Initiative. So it's technology focused. Right now we're building a prototype just to see whether a platform can handle the unique needs of the United States. That particular effort is technology agnostic. We're not necessarily looking or excluding blockchain and distributed ledger type systems. In addition to that, we're also looking at not deploying 30 more, but looking at 30 more platforms. They could be distributed ledger open source. They could be private sector initiatives. But we're trying to understand what's the possible suite of technologies that could possibly support a CBDC, just say over the next 2 years or so. Our research is going to take us.
What do you see?
Distribution models.
Sure, yeah.
We're trying to build a system with MIT that can be deployed in many different ways. Those policy decisions are very complicated and they haven't been made yet. So we want a system that could either be distributed through banks, through other financial mechanisms or other players, or even directly to consumers. We're not saying they would be sent directly to consumers, but we want to make sure the platform that we're building for prototyping can meet all those needs.
All right. And what do you see as the advantages of a more open system rather than a centralized ledger, or vice versa? How would you resolve scaling challenges?
Well, that's one of the major things we're looking at. Within the first phase of work, we're building a platform that can meet the unique needs of the United States at its very core. So, for instance, throughput. We haven't set the exact number, but we're presuming that the number is going to be tens of thousands of transactions per second. So by definition, that excludes some existing open source platforms, but not all of them. And then once you add more programmability, more complexity to the system, you have to make sure it can still scale. So it can still reach multiples of tens of thousands of transactions per second once you add certain things in there, for instance, like know your customer or anti-money laundering, if those are features that are eventually baked to the platform. So We are agnostic. We are building 2 platforms with MIT, but also looking at 30 or 40 more. And we'll take some of those 30 or 40 more and bring them into our labs and test. So we're not deploying 30, but we're looking at well over 30 different ways of trying to.
Are you favoring a more centralized ledger?
Yes, most of them are, well, centralized in that, for instance, they'd be controlled by the Federal Reserve, but distributed in that there's probably multiple copies of them, spread out, one for performance perspectives, one for resiliency, for defense against cyber attacks. So traditional systems can still be distributed in that you can have data spread over multiple centers, processing spread over multiple centers. Our assumption is this is in the cloud, so very flexible as far as how this is actually distributed. But by distributed, I don't mean distributed ledger necessarily or blockchain, but a technology that allows for performance and throughput to be enhanced by this distributed nature.
Right, and but
our assumption is it would be controlled by the Federal Reserve as a centralized body versus decentralized as what Bitcoin is.
And run in very top secret locations, I imagine. How would the Fed control money supply with a digital dollar? Economist Nouriel Roubini came on the show a couple weeks ago and said CBDCs, central bank digital currencies, are inevitable, that there will be globally coordinated monetary policy. Negative rates could become the norm. Do you agree?
Well, there's a lot of questions packed in there. First of all, some countries are talking about interest rates on CBDCs, possibly even negative interest rates as a monetary policy tool. We have not really taken that tact in the U.S. It's going to be country by country decision as to how that particular piece. I do think we need to think about international interoperability so that we can fix some existing problems today, such as retail or wholesale cross-border. So I think those are all important aspects of it to make sure that it is distributed. As far as the money supply, just like the money supply today, the Federal Reserve determines what has to be in circulation to meet the needs, and the same would be with the CBDC. Just because it's digital doesn't mean like it's an endless supply, it can become inflationary. It's really something that can be controlled, but within the existing ecosystem. So we don't see a CBDC being digital as really changing the monetary policy tools of the U.S. and not changing how much cash will be in circulation. I think that's a function of need and can be controlled.
Right. Another big area of concern is privacy. So programmable money could conceivably be programmed to track every individual's transaction history. How are you defining what data will be collected and what privacy measures will ensure that government agencies aren't surveilling our actions without due process?
Once again, a lot of questions packed into one set of questions there. First of all, privacy and traceability, I think, are two of the most important factors we have to think about. And once again, we have not set those policies in the U.S., but we're trying to make sure that the systems that we build as a prototype can handle various options. So you can consider having privacy be between the two parties that are transacting, but also potentially the Federal Reserve as the operator of the network. But there are ways of having other programmability without exposing the data. So for instance, if you wanted to do anti-money laundering checks with newer technologies, with cryptography, you can do those checks without exposing the data to the entity that wants to know whether there are any potential AML or KYC issues. Zero-knowledge proofs, although there are scaling issues, is one way of thinking about analyzing the data against, say, OFAC lists, but without the entity being able to see it unless there's a hit. So I think privacy is one that's going to have to be a balance in this trade-offs between privacy and traceability, because we still want to catch the bad guys when it's appropriate to do that. So complicated questions in our technology trade-offs too, we're trying to understand as well, but no final decisions at this point.
Right. Jim, China is already distributing their digital yuan, onboarding merchants and testing their digital currency in various cities. Is this a threat to the U.S. dollar's dominance, the digital yuan? Are you concerned they can circumvent U.S. sanctions with their digital currency?
Well, first I'll quote Chair Powell of the Fed, who said, we don't need to be first, we need to be correct, we need to be right. So whatever we build has to be built right. China does put pressure in being a first mover, but that doesn't necessarily mean that they have a shot at displacing the dollar as the majority reserve currency of the world. That's not my area of expertise. There's been some good papers published out of one I just got from the IMF, which was published last year, that talked about reserve currencies, how they come into dominance, how they stay, and what might threats be. And I have heard people talk about the potential of CBDCs being a partial threat to that system. It's much more complicated than that, but like I said, I'm not the expert to determine or to say what would potentially displace the U.S. as the reserve currency. But I do think it is a wake-up call. It does prove to decision makers that CBDCs are here and they're real. When you have a country the size of China issuing a CBDC, I think it shows that this is a path that many of us will be going on at some point in the future.
Absolutely, Jim. I feel like I could speak with you for many hours on this subject, and I'm packing those questions in because we have limited time. But thank you very much for joining us today.
Oh, my pleasure. I was willing to follow up as needed as well.
All right, that was Jim Kuna, Senior Vice President of Secure Payments and FinTech at the Federal Reserve Bank of Boston. Coming up, BTC Markets discussion with LMAX Group CEO David Mercer. Welcome back. Quick Bitcoin markets checkup. The XBX Bitcoin price trading at 54,000 to about 300 right now, according to trade block data. Joining me now with more from London is LMAX Group CEO David Mercer. Welcome, David.
Hi, Christine. Thanks for having me today.
Good to have you here. So just want to get your reaction to Bitcoin's retreat today. Anything to be concerned about here, or just a healthy correction?
I wouldn't even say it's a correction. I mean, let's face it, it closed the year at 29,000. We hit the highs of 58,000. I mean, we should expect pullbacks. And it was, if you like, forecast a little bit by declining volumes over the past week. So pullbacks like this should be expected. I don't think there's any reason to panic. I mean, it could well trade in the 40,000 range. You might even see the 30,000 range in the next week or two.
Fair enough. Well, JP Morgan, however, released a report saying institutional flows into Bitcoin don't add up from 300 billion market cap in September to the 1 trillion market cap today, that the price surge we are seeing right now is basically speculative retail frenzy. Do you agree?
I think there might be something in that. I mean, it's been spectacular. I mean, the word used a lot is the parabolic rise in Bitcoin. So it's not normal that it'd be up 100% in such a short time period. I mean, what I would say to counterbalance that, the total market cap of Bitcoin today is around $1 trillion. If just 5% of all the assets under management in the world today were put into Bitcoin or crypto assets, you could expect the price to go up fivefold. So I think, yeah, there's a little bit form over substance, a lot of headlines driven by Mr. Musk. But certainly you haven't seen that weight of money enter the market. A lot of retail investors jumping on the bandwagon, but there is some real institutional demand out.
Yeah. Well, LMAX Group is a leading operator of institutional, foreign, and cryptocurrency exchanges with offices in 11 countries and a global client base. What are the trading similarities or differences between activity in Europe versus Asia versus North America?
Within digital specifically, within the crypto landscape?
Within the Bitcoin landscape.
I think actually you have to look, for me, it's a global market. That's partly why LMAX Group launched LMAX Digital 3 years ago, in that it's a global product. We've got customers in 100 countries. So people expect it to trade 24/7. But it'd be fair to say that the retail investor community adopted it first in the US. So we're established in London, and really we're offsetting institutional risk globally. So from the Americas, from Asia, and from European players. I don't think you quite have the same, if you like, retail frenzy in Europe that you might have in the US and Asia. And there's much more stringent regulation around that in Europe, certainly. So I think it's more of an institutional product in Europe today. That will grow also in the States. But certainly the market overall is driven by, retail investors, probably from either side of the universe, so the Americas and Asia Pacific.
We just heard from the Federal Reserve Bank of Boston on the digital dollar project. Are you talking to any nations about listing central bank digital currencies, or how do you see these sovereign nation currencies interacting with or disrupting Bitcoin?
I think they're completely different things. I mean, believe it or not, I might even quote Vladimir Putin here, right? So central bank digital currencies on crypto, they may or may not use a blockchain, right? But it's still centralized, goes against everything, all the ethos you see in crypto and the initial white paper. That said, I think they can be very beneficial for the market in general. I mean, how do we get the stimulus checks to people more quickly? How do you put your capital to work in a more timely basis?
Well, quickly, David, are you working with them in any way, and CBDCs hearing from nations about, wanting to work with exchanges or?
I speak to all the key bodies in the UK, but no, it would be wrong of me to say that LMAX Group is working specifically on a central bank digital currency.
All right, thank you, David, so much for your time. Appreciate it.
Thank you.
All right, that was LMAX Group CEO David Mercer in London. Time now for the chart of the day. Some 40,000 BTC worth over $2 billion were transferred onto major crypto exchanges since Friday, pushing up Bitcoin balances on exchanges to levels unseen since the end of January, according to Glassnode data. More than half that Bitcoin went onto crypto exchange Gemini Sunday afternoon when Bitcoin approached $58,000. That record level, suggesting investors were potentially preparing to take profits. That's it for All About Bitcoin. I'm your host, Christine Lee. Join us tomorrow morning at 9 a.m. in New York for First Mover, your first look at the day's global crypto news headlines. You're watching. $1 trillion market cap, capital T, as Bitcoin blazes past $55,000. Another milestone-setting day on All About Bitcoin. As we dive into all things, questions, and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. I'm your host, Christine Lee, and checking in on our favorite orange coin, coming down from a record high of about $55,707. It's still over $55,000 there. You see, about trading up almost 7% over the past 7 hours on a record-breaking trajectory, according to TradeBlock, the XBX Bitcoin price. Now, the XBX has been the most reliable Bitcoin reference price for institutions since 2014, with billions in assets under management benchmarked against it. So let's just dive right into it, shall we? Joining me to discuss is our Week in Review panel, CoinDesk Managing Editor of Technology Christy Harkin in Toronto, First Mover Editor Brad Cowan in Austin, and CoinDesk Director of Data and Indexes Galen Moore in Boston. Welcome, everyone. It's an incredible day, another incredible week for Bitcoin, 1 trillion market cap. Can you believe it?
When will it stop?
Seriously. Well, the price is continuing to explode into uncharted territory. Just on Wednesday, seems like a year ago, but Bitcoin passed the $50,000 psychological barrier. Brad, start us off here on the significance of these BTC milestones.
Well, just starting with $1 trillion, it's a lot of money. I remember when I a previous job, an editor-in-chief, was reading a lot of stories, and he made the comment on stories. There's a lot of B's. There's a lot of billions you're seeing on stories these days, and nowadays the trillion is kind of the new billion. And so it's a number that's going to get a lot of people's attention. It's like people think about the Federal Reserve's balance sheet expansion in terms of trillions. People think about the national debt in terms of trillions of dollars. People think about other asset classes in terms of trillions of dollars. And now Bitcoin can be thought of in terms of trillions of dollars.
Incredible. I wonder, Brad, has BTC gone from a magic internet money meme to an institutional grade investment asset now?
Yes. I mean, that's kind of the story in 2020 when institutional investors started to embrace Bitcoin for real for the first time. You started to see smart money, big smart money getting into the space. And you've just seen more and more of that over the past couple months. And a lot of people say that's what's driving the price up now.
Right. We also heard U.S. Treasury Secretary Janet Yellen pushing the Biden administration's proposal for $1.9 trillion stimulus. MicroStrategy this week announcing it's boosting its Bitcoin stash again, and money manager BlackRock is dabbling into cryptocurrency. And North America's first Bitcoin ETF reportedly trading $165 million in volume on its first day. Other big news this week was that Coinbase brokered Tesla's $1.5 billion Bitcoin purchase, and their valuation is $77 billion in the NASDAQ private market. Galen, so much bullish activity. What are your thoughts?
So I think, first of all, on the Tesla Bitcoin buy, that was definitely a catalytic moment, at least in terms of the events of this week. But you also have to look at, with any of these announcements, right? Michael Saylor, Elon Musk, with the announcement that this company or this individual is buying Bitcoin, who benefits? Does Bitcoin benefit or does the individual benefit? I might say that Elon Musk and Michael Saylor get more juice out of the announcement that they're buying Bitcoin than Bitcoin gets out of their activity buying it. And I think that's a pretty common thread through a lot of the people who've come out and embraced Bitcoin in the past. But in the past week or two, you've started to see that beginning to change with institutions like Bank of New York Mellon, right, that really don't need to advertise in that way, going out and saying they're going to start supporting Bitcoin for their clients. That's huge. And that reflects the kind of Bitcoin becoming an institutional grade asset. Now, do institutional asset managers take interest? And to what extent do they take interest? I think that's a story that is still being told.
Right.
But when it comes to Coinbase's $77 billion valuation, that's really interesting. And I think it comes down to the same reason why you're seeing the interest in the Canadian ETF, Christine, because both of these things these are assets that are, Bitcoin is an asset that's shut out of the public market, right? And there's demand to buy those assets in the public market. So when you look at things like the Bitcoin ETF that was approved in Canada, which by the way is underpinned by the XBX, which is, as we know, CoinDesk's product through its subsidiary TradeBlock. When it comes to products like that, it's showing interest in that. When it comes to the GBTC premium, And when it comes to a $77 billion valuation for an exchange that may or may not go public at some time in the future, that's an indication that people want to have public market access to this kind of to this asset category, and they're getting it through these vehicles. The other thing that's interesting about Coinbase, though, is, I mean, think about this, right? If you ask any man, woman, or child on the street in any American city anywhere today, name a top Wall Street firm. Name a top Wall Street firm. Do you think the first thing that comes out of their mouth is going to be the NYSE, right? Or NASDAQ or ICE? Is it going to be an exchange operator? No, it's going to be a bank. It's going to be JP Morgan or Goldman Sachs or Morgan Stanley, right? But in crypto, the biggest entities, the ones that are best known around the world, and this holds true in America as well as globally, right? Binance, Coinbase, BitMEX, OK, Huobi. These are the entities that people know about, the exchanges that are running in this market. And they're the ones that have come out and seized the kind of revenue narrative and the spirit of it. So what does that say? It says something about the structure, I think, and it says something about the reasons people are participating in these markets.
All right, but on your other point, we are seeing more and more talk of corporations and banks wanting to get into a piece of the action. Earlier, CoinDesk reported that UK trading firm BCB is launching Bitcoin treasury services for crypto-curious CFOs after we saw that after an explosion of corporate interest following Tesla's huge $1.5 billion Bitcoin buy. So the bulls have taken over, but the bears are still showing their claws. JP Morgan released a report that strategist Nicolaus Penagurtoglu came on the show yesterday to talk about, saying Bitcoin at these levels are unsustainable. He basically said retail investors are driving this rally, not institutions. And he said not institutions because investment in the Grayscale Bitcoin Trust, a sort of indicator for institutional interest, is not growing at the same rate as Bitcoin's market cap. He concluded that this is a frothy retail rally that we're seeing right now. And just a disclaimer, note to viewers that Grayscale is owned by our parent company, Digital Currency Group, which is a parent company of CoinDesk. But Galen, so do you agree with JP Morgan's analysis?
You know, I think whether this is a retail-driven or an institutional-driven rally right now is a little bit tough to tell. I mean, if you look at metrics like the CME Bitcoin Futures Total Open Interest, that market continues to grow in size. And to my eye, right, reflects the participation of institutional grade or institutional level players. Now, you know, whether that market is being used for speculation or for hedging of long-term Bitcoin positions is an open question. But when you see, again, I'll mention it again, BNY Mellon coming into the market, you have to know that that indicates some kind of level of interest from their clients, right? BlackRock talking about Bitcoin. Again, like the signals are there that there's more legitimate and, you know, long-term institutional interest in this narrative of Bitcoin as digital gold than there has been in the past. Now, when it comes to the Grayscale Bitcoin Trust, I think that's an interesting kind of wrinkle on the market. It goes back to my point earlier about, loophole-ish access to tough to trade assets on public markets, right? So the Grayscale Bitcoin Trust trades on the secondary market as GBTC, and people pay a premium to buy it. Investors pay a premium to buy it as GBTC on the secondary market, right? So for a long time, there's been a thing called the GBTC premium trade, in which institutions buy it primary, right? And then they sell 6 months later after the lockup into the GBTC secondary market, and they make the premium as a markup on their profit on the underlying Bitcoin, right? So that premium has begun to collapse. And that may reflect a lack of interest in the secondary market product, which, by the way, is a mix of retail and institutional buyers. But it may also simply reflect a flood of supply on the other side, as we saw like banner quarters for the Grayscale Bitcoin Trust in Q3 and Q4, in Q2 and Q3 of 2020.
Right. I also want to get to the network side of things, and Christy, you're our tech expert on that. This week, Bitcoin devs met and discussed Taproot activation. Do you have an update on that for us?
Yes. So one of the things, if anyone's been following along with what's been going on with Taproot, is they mostly figured out that, yes, we want Taproot. That's done. That's fine. The question has been over the last little while, when are we going to do it and how are we going to do it? And they seem to have nailed down the when. The when is going to be in July. The how, though, and this is important, the how has not been 100% defined yet. And what devs are probably going to want to do is get a little bit of community input to figure out, do we want to have what's called a user activated soft fork, which is going to sort of add an extra level of compulsion on the miners to actually get around to activating the upgrade, just to make sure they don't just sort of sit back and go, yeah, we'll get around to it. Or do we want to just trust that they're going to do it, not put in this measure, this sort of kind of like a hard measure to be like, yes, you're going to do it, and just trust they're going to do it, and make sure that everything happens in a consensus friendly manner. So what we're hoping to do is at some point get a little more input from the community to see what they think and whether or not they think we need to have this use of activated software.
Always a good update on the network from Christy. All right, we gotta go on a break, but coming up, a look at the week ahead and more BTC discussion with our CoinDesk panel. Well, we're seeing Bitcoin passing that $1 trillion market cap, $55,000 Bitcoin. Brad, will we see a correction, or will Bitcoin keep skyrocketing ahead?
Anybody, who knows? I'll say what we have seen and what, analysts have said, which is, number one, this $1 trillion mark. Well, first, the $50,000 mark earlier this week was seen maybe as kind of like a psychological ceiling, and Bitcoin blew through that. And then, the $1 trillion market cap was reached at about $53,700. People maybe saw that as another point. Bitcoin has blown through that too. Bitcoin's now like 55,000. So it pushed past the 1 trillion mark. It just kept going. Will it keep skyrocketing? A lot of people say yes. Will it correct? Definitely. It's a question of timing. Just checking my feed, one of my sources was saying
just keeps
that
going.
It could go down to like 52,000 or 51,000 at this point, or kind of the next on the charts levels that people are looking for. So yes, it could keep skyrocketing, and yes, at some point it will correct for sure.
Right. At some point, people want to take profits. Christy, at the same time, as Bitcoin goes up, so are the transaction fees and mining profitability. What can you tell us about that?
Well, the miners are making some money. The profitability on the mining side has definitely gone up. For example, in October, you were looking at like what, a $10,000 Bitcoin, and an S9, like an older version, was making roughly about $10 a day, spending about $10 a day worth of power. But now they're getting like $25 a day to mine the same amount, roughly. I mean, you're quintupling the amount of money that you can make on the same amount of energy. So yeah, they're doing great. And as a result, we're actually finding more miners are turning back on when the hash rate, like when it goes down, when the profitability goes down, miners, especially of the old variety, the less efficient miners, they tend to turn off because it's not profitable for them to run. But now we're getting many more miners online competing to find that next block, and that's good for the network.
Yeah, but it's expensive to trade on the network. Galen, this week the head of Robinhood, Reddit, hedge funds, and Wall Street Bets trader testified before U.S. lawmakers on market manipulation during the whole GameStop trading frenzy. What were the implications of this hearing in terms of how they will impact lawmaker decisions, rules, laws, or regulations in the future, and how could it impact crypto trading?
I think it's a tough one to call. I said in 2020 that we'd see the parties bifurcate on crypto. We'd have one pro and one con, and that turned out to be totally not true. And it's hard to say like kind of what the political landscape is shaping up like. I don't think the hearings this week on Robinhood really have a huge impact on actual regulation on the ground on securities. I think the most powerful signals we can look to right now are from the OCC in the U.S., which has cleared a path, right, for banks to move forward in crypto. And I think that's really the most positive progress we've seen so far. And I think maybe we'll see similar moves or some more clarity and additional action from the SEC and CFTC in the future as well.
All right, well, it was certainly an exciting week with the hearing, with Bitcoin's price going crazy and advances in the network. Thank you so much, everyone, for joining us this week.
Hello, everyone, and welcome to the webinar. I'm John Bowens with Equity Trust Company. Really excited about today's program. We have a special treat for everyone. In today's program, we're going to be talking about cryptocurrency investing in a self-directed IRA. And joining me on today's call is Robert Polyak, and I'm excited to have Robert on the call today. Robert is an Equity Trust client, and Robert has effectively used the Equity Trust digital asset platform to invest for himself and his wife. So we will talk a little bit more further through that process and what that looks like. To give you an idea of what the agenda is for today's call, what we're going to do is go through an interview where I'll ask Robert a series of questions, and Robert will talk through a little bit about how he got involved in cryptocurrency investing, how he got involved in cryptocurrency investing with a self-directed IRA. And that's going to be part one of the webinar. Part two of the webinar, we have a demonstration where we'll actually show you how the Equity Trust digital asset platform could potentially work for you. And I will go through the costs and how to get started. So this is a two-part webinar. Part one, again, is our interview with Robert, who is an Equity Trust client. And then part two will be, all right, now that you learned about the cryptocurrency marketplace and some of the opportunities associated with investing in cryptocurrency, utilizing a self-directed IRA, all right, how to execute on acquiring cryptocurrency utilizing your self-directed IRA. To give a little bit of background on Robert, and I'm going to have him introduce himself in just a moment and share his story. But I did want to mention the opportunity here. So Robert established his self-directed IRA for him and his wife. This was going back to April. And on May 3rd, he bought Bitcoin. At that time, Bitcoin was trading at around $5,600. And when I pulled the Bitcoin price as of 11/20/2019, it was trading at about $8,100. So about a 70% increase in value from May 3rd to November 20th. So congratulations to you, Robert, for taking advantage of the opportunity. And I know when you had bought it, you can see there from the graph, Robert bought Bitcoin on May 3rd as it started to ascend. And again, as of November 20th, 2019, trading at $8,147. So excited to interview Robert here. Before I jump into that, I want to mention that Equity Trust Company, who is broadcasting and delivering this educational material, we are not a tax advisor or a legal professional. We're here to provide education and information. We are a self-directed IRA custodian. So what that means is folks come to Equity Trust Company to establish an IRA, and we have well over 130,000 customers and $25 billion in assets under administration and custody. And folks come to our organization so that we can custody their self-directed IRA or other tax advantage investment accounts. And then they give us direction to invest in cryptocurrency, as we're going to be talking about on today's webinar, as well as a wide array of other alternative assets, such as real estate notes, hedge funds, private equity, precious metals, and there are many other types of alternative assets that one can custody in their IRA. Also important to understand in terms of cryptocurrency investing, I'm not here to endorse or recommend a specific coin. I will talk through the various coins that the platform supports. Robert will speak a little bit to his experiences with investing in Bitcoin with his self-directed IRA as well as his wife's self-directed IRA, but that's not an endorsement for these particular investments. Of course, the cryptocurrency markets can be incredibly volatile, so you want to make sure you do your own due diligence and work with the necessary professionals associated with investing in these particular types of assets. So with that being said, I'm going to go ahead and introduce Robert Polyak. Again, he is an Equity Trust client. Excited to have him on with us. Robert, welcome to the call. And if you could maybe start off by telling us a little bit about yourself and how you got involved in cryptocurrency.
Yeah, I'm excited to be here and to share kind of what I've learned along this the path to crypto with Equity Trust. But basically, I'm an engineer by background. I work for the state of California, and I've been interested in early adopting on different ventures. We're into real estate and stuff, and I'm married and have a couple of boys. But all the investment decisions I make, it's in a partnership. So that's my number one thing, is as long as we're in lockstep together, we make the decision and analyze the risk and kind of look at what we're interested in doing, and then making sure we both agree on the path to how we want to proceed. So it's really important to me, but you know, I kind of had a circuitous path growing up and been involved in all kinds of stuff. But what that's led me to is an interest in a lot of different things, and cryptocurrency is one of them.
Outstanding. So how you said it was approximately a decade ago that you actually got into cryptocurrency, correct?
Yeah, that's correct. And how we got into cryptocurrency is we were developing a web-based company, and it was in the kids space with trading cards. And when we were developing that, one of our our key coder was basically getting into the crypto world. So this was over 10 years ago. The space was pretty new and very volatile. Bitcoin at that time was trading about $1 a coin. So he kind of got our interest, and we started watching it, and that's really what got us there. And then we saw his career progress. He owns, it's been seed rounded, a couple rounds of funding. He's in France right now with the company out there in the crypto space. They do blockchain security. So he kind of got us in there. We go and see him talk. He's traveled all over the world, but he got our interest into it. Unfortunately, we didn't jump on the bandwagon as early as we would have liked to. At one point, we had 2 boys, and we wanted them to start some investing and giving them each $500 to invest in crypto, but we didn't pull the trigger. So when John showed the chart earlier, it's kind of like, I wish in some ways in retrospect that we would have pulled it way back then, because it would have just been astronomical, the growth back then. But I'm happy with the 70% return, and there is some analyzation, and you kind of have to assess your risk. There's still some room in this market, but just watching it and getting with other people that are interested in crypto and that have some experience will really help.
Outstanding. And Robert, you had mentioned, and I appreciate you sharing me your story earlier, and really talking through how you got into this business and then what you're doing now. And I understand that it wasn't getting into the business 10 years ago, investing in Bitcoin, and then kind of set it and forget it. It sounds to me as if you're still doing a significant amount of research on a weekly or even daily basis in the crypto markets. Maybe share with the audience a little bit about, especially someone that is brand new to investing in cryptocurrency, and they're looking for, where do I start to dive into the crypto markets? How do I do my research? And then how can I network? You had mentioned networking. How do I network with other investors? You had shared maybe visiting meetup groups. If you could share with the audience maybe some tips or pointers on where someone could go or look to get started in investing in cryptocurrency.
Yeah, for me, and it's really kind of how I research and start being involved with any type of investment or new venture, is to find, determine the direction that you want to go. And if you're interested in it, try to find other people that have already moved forward on the path. And that's probably the shortest way to start walking down it, and then to move you along faster. So for me, the crypto space, one of the things, and actually in real estate, I belong to a number of meetup groups, and when I discovered meetup, in some ways it's life-changing, because you go into a group of people that totally have your mindset. They're interested in whatever you're interested in, and that group is, from hiking to real estate. I'm in a number of real estate ones. I'm in a couple of cryptocurrency ones. But what they will do is kind of give you a jump start. The crypto world back 10 years ago was really difficult. Like I said, we were with somebody that's an expert in coding and website development way back then. And even then, it was harder to get in there for the average, the novice average user to get in the space. But by joining the meetups, and it's meetup.com, you can search and look whatever you're interested in and try to start attending some groups, and then find out if you're a fit in that group. And what you'll find is there's people that are going to be much more knowledgeable than you in that area. There's going to be people with less knowledge than you in that area. So you just kind of find a group that fits you and that you click, and then you just start participating. And if you have questions and you've done your own research, then you can kind of bring that to the group, and then everybody provides value for one another. So for me, the meetup and connecting with like-minded people that have ventured down the path farther than I have really helps accelerate your growth into the space. And then it kind of offsets some of the risk of the unknowns that you don't know about and that you would have had to encounter by yourself. So like I said, I use it to kind of jumpstart us, move us down the path faster, because I can sprint when somebody shows me how and help handhold. One of the things that we did with crypto, which was kind of unusual and it's fun, like I said, I have a couple boys, is my son and I, we each took an investment amount. We made a deal with one of the members that had a game shop. And what he was doing with his game shop is taking old equipment and making data mining machines. So what we did is we agreed to a deal with him, and then we ended up funding some of his machines, and then we would get a percentage. So what we were doing is basically paying for his computers. He'd assemble them, and then we were making our money back plus profit based off the data mining. So it's been a good investment, and it kind of, shows you're helping your child, set their life forward on why you do these kind of things, and then reap the benefit of doing it, and then, pull some money out when you get it, and then do a little savings and in giving or whatever you're going to do with it. But it also shows you that, hey, we've analyzed the risk. We know we could lose everything, but it's worth trying, and then gather information and seeing if the investment was right. And then one of the sons took me up on it, and then he reaped a pretty good return in six months. Actually, we were very happy with what we got. But that was another element that brought us into the space a little bit more. So we didn't have to know anything. We were able to piggyback off somebody else's knowledge and make money off of that.
Okay, that's outstanding. Well done. And as you were talking about, and you shared with me earlier, your children, getting them involved in the business, and you had mentioned your interest in real estate as well and being part of real estate meetup groups. And that's another aspect of our business that some of the folks on our call may be familiar with, some may not be familiar with, and that is the ability to use a self-directed IRA in addition to investing in cryptocurrency to also buy and sell single-family homes, multi-family homes, buy and hold for cash flow or fix and flip. There's a variety of ways in which you can use your self-directed IRA in real estate as well as cryptocurrency. And to bring it full circle in terms of getting your children involved, I've worked with a lot of investors here at Equity Trust that will get their children involved with their IRA funds in buying real estate. So whether that is the child has a covered education savings account or a self-directed IRA, getting their children involved in those particular projects. And eventually those assets of mom or dad or grandpa or grandma are going to be left to that grandchild or that child. And so teach them how to invest in these types of alternative assets so that eventually when they leave their retirement plan, their legacy, if you will, to that child or grandchild, they're able to continue to preserve it, continue to grow the account, continue to generate cash flow in a tax-free and tax-deferred manner. So congratulations on that, Robert. So moving on to the next part of the interview, what I'd like to know a little bit about and what I want our viewers to know a little bit about is you selected Bitcoin for your first investment with your self-directed IRA. There are other coins available, and I will talk more in depth about those other coins in the second segment of this two-part webinar today. But the available coins are Bitcoin, Bitcoin Cash, Ethereum, Ethereum Classic, Litecoin, and Ripple. Those are the 6 coins that initially were on the launch of our crypto platform a couple of years ago. We've, in the past year, included Stellar and Zcash, and then the most recent addition is Bitcoin Satoshi's Vision. And that all came out of, as you may know, Robert, the fork that occurred not too long ago. So looking at the different types of coins available on the platform, what attracted you to Bitcoin? What drove you to pull the trigger on acquiring Bitcoin with the account for your first transaction?
Yeah, my belief is that Bitcoin is the number one. You talked about cryptocurrency. The Bitcoin is synonymous with that. Everybody's heard about it. They know about it. It seems to be the one that people watch. It's probably the most common. The other thing that kind of gets you on Bitcoin is before I got into equity trust, when it wasn't an allowed transaction, there was no custodians that offered this opportunity, is you're doing it on yourself. And almost all the exchanges require you to, you got to connect your bank account, and then once you do that, you're doing a transaction. Typically, your transaction is going to be Bitcoin or, like you said, Ethereum or Litecoin. Those are, a few of the popular ones. But the exchanges, the ones where you can integrate your cash into the system, typically they're dealing with on the bigger coin. So in order to move to other things, like another coin we're invested in is called Dash. you have to purchase your Bitcoin, get the cash into the system. So you're using an exchange like Coinbase, and then you're bringing it in to buy a currency that you can take to an exchange and then take that currency and exchange it there. All along the way, you're paying transaction fees. And that has been some issue, but they're getting lesser and the transactions are actually occurring faster. So as those things develop, that'll open the marketplace for more of a credit card type of transaction with cryptocurrency. When that comes, in my belief, I think it's really going to open some things up. But right now, those fees are starting to diminish, and the time to conduct transactions are starting to move a lot faster. So as that goes down, it's going to make the availability. One thing where Equity Trust, which we've actually, to be honest with you, in the self-directed IRA market for a long time. The website development that we did, that was a self-directed IRA. And what we needed to do is we were bootstrapping the company. And it was interesting because back then in California, there were only a couple of attorneys and accountants that were actually in the self-directed space that had experience themselves. So that was really key to us. So we had to travel to the Bay Area to, meet with some lawyers to talk about how we do this. And even at that time, the IRS had a field ruling. So what was happening was people were using their self-directed to go into purchasing a business. So like you could go into a Subway and then buy a Subway. It's a great opportunity. Real estate, it's a great opportunity. Your money's sitting there. What better way than to take that money and invest it in something that's tangible you can touch? Like real estate, it's kind of fun with that stuff. And then you're reaping all the benefits, the tax advantages of having the IRA. But even at that time, the IRS had a ruling, it was called ROBS, actually, Rollover Business Startup. So, and it was a field ruling, so it wasn't even really a law. And they called it ROBS because what a lot of people were doing was rolling their self-directeds over into businesses, and then they would buy a truck, and they were doing non-allowed transactions, and then they were basically depleting their retirement account. So for us, we have to make sure we're generating operating revenue and certain things to make sure you fit the requirements. But if you're following the rules, it's going to be no problem at all. But that's why I was really excited. And even back then, we were watching Equity Trust to see what kind of partnership and, is that the right place to use as a custodian? And then I was really excited when Bitcoin became an opportunity. So when Equity Trust allowed that, then I was trying to get in that space really quick because I knew from our experience with cryptocurrency and then having a custodian is one more step to legitimacy. So now the custodian is regulated by law. It kind of makes it more authentic of a transaction. It's not as wild of a west as it was in the beginning. Now you have some fiduciary responsible companies that are taking the transactions. And to be honest, it is much easier to get into the crypto space now, especially if you're looking for self-directed. Equity Trust made it super simple compared to the doing it all by yourself and then going from, bringing in, signing your cash into an account that buys some cryptocurrency, taking the cryptocurrency, moving it to exchange where you want to exchange it for other cryptocurrencies. And then the other thing that you have to be really careful of is how do I secure that? Because really it's hashtags and you have to keep your number and what's the transaction ID. If you lose that, you're going to lose your money. If someone obtains that, and there have been some hacks, it's not with the coin, it's with the people that are holding what they call your wallet. Your wallet is where it keeps these unique IDs to tell you how much coin you have. With Equity Trust, that takes it away from you. You don't have to worry about it. They're taking care of all that for you. But if you're not with somebody that's doing it for you, you have to set up your own wallets, and it's just, you can see it along the way. It's kind of a hard path to navigate, especially if you're kind of learning it by yourself.
Mm-hmm. That's great, Robert. And I appreciate you bringing that up. And for our viewers, in the part 2 of this webinar, I'm going to show viewers the entire supply chain an ecosystem of the Equity Trust platform. So from the online order entry interface, which you experienced, of course, placing your first trade in Bitcoin, to that trade execution following through the exchange, which is Genesis, as you may know, and then ultimately the settlement occurring and the coins being delivered to Volt, which is our cold storage vendor. So for our audience out there, what Robert is describing to you is the entire supply chain of acquiring cryptocurrency. Equity Trust Company is providing the digital asset platform, essentially the technology hub that brings all these vendors in together so that you don't have to manage, as Robert was talking about, keys, IDs, wallets, whether it's a cold wallet or a hot wallet, multiple hardware devices. It's all integrated into that system. And you're absolutely right, Robert. That was something that we had to make sure that we narrowed in on when we developed this technology, was a fully integrated end-to-end system. Because if we had customers that were putting themselves in a position of not being able to mitigate the risk factors, well, that could become problematic in the future. So we wanted to make sure we have a system that mitigates as much risk as possible. And of course, just like I mentioned at the beginning of the webinar, there's risk with any investment that someone would make with their self-directed account, whether it's in real estate or cryptocurrency or precious metals. But if we can mitigate those risk factors by putting technology components in play, that obviously is beneficial and advantageous to ourselves as well as our clients. So transitioning not necessarily away from that topic, because I did want to narrow in on your experience investing outside of the IRA versus inside of the IRA. So maybe if you could speak, Robert, a little bit to investing in cryptocurrency, or even if it's tokens or other blockchain type mechanisms outside of the IRA versus inside of the self-directed IRA.
Okay, so I talked about data mining. For that space, it is getting so competitive now, and then the price of electricity is really driving that. You have to be able to pay for the electricity to do the mining. For us, we are totally out of the space now. There's too much competition. California electricity costs are just too expensive and prohibitive. We were in there a little while, and it was very fruitful with us. We do, have partners that we work with on other things in real estate that are still in that arena, but for us, we kind of got out of it. It was a great experience. Investing on your own, the graph earlier, we showed it at $8,000. We bought cryptocurrency at that price point. So just saying, we've kind of been all along the spectrum and still feel like for us, it's worth the risk. And then there's certain things that are happening in the cryptocurrency world that we're hoping will produce, some fruits and still make it very valuable point to get on there. You're still kind of on the early end. For us, it was, we're involved with this self-directed IRA on a bootstrap company. That's one thing. We do real estate. We do the buy and hold wholesaling, the BRRRR method. That's another thing. Using, knowledgeable people like meetups for real estate, we focus, and one of the key resources we use is something called biggerpockets.com. It's a great resource for like-minded. But biggerpockets.com, you can work and take your IRA money and partner with them. The real estate space, to me, is opening up so much for other people that don't want to do a lot. There are a lot more opportunities to become a lender and make money that way. You can get in a real estate investment trust. There's a lot more. But Bigger Pockets was a great resource and really helped us learn about real estate and how we can utilize some of those things, the tools from self-directed, and tie it into real estate. And it was pretty fun to walk a property that you can see, you can touch, you can feel. Our boys, we had a multifamily that we rehabbed over a summer. That was our summer vacation, and it was kind of fun because we went through the list of everything that we did at that place, from bombing bugs to painting and just all kinds of stuff. And that was the summer, but we had this whole list and a fun experience, and kind of showed them, hey, there's a real opportunity to do this, and using your IRA as a way to bring money in to do what you want to do. So with the Bitcoin world, you really have to assess your risk. It is still pretty wild, but you got to, and that's why I said with your partner, with my wife, and even with my kids, and here's the caveat with the kids. When they invested into Bitcoin, I made the promise to them that they would not lose their initial investment. So I was willing to take the risk. Whatever they put in, I would guarantee they wouldn't lose. And that was on me, but I wanted them to be able to, hey, I'm removing some risk because they don't have access to a lot of cash. And then it says, I'm not going to lose my money. So now I have to make the decision, do I want to put my money in there and then see if it grows? At the end of the day, I'm going to get all my money back because that's what my parents promised us. But for us, it was the reward of getting them into something that they wouldn't have gotten in before they were teenagers. So that was kind of helpful. Like I said, crypto, assess your risk. What are you willing to? You could potentially lose it all. Crypto's a wild ride. In between the time and when we had put into equity trust, we could have made over 100% of the money we put in there. If you looked at that graph, it was peaking up there. It was up towards the 11,000 range. There are some things that are happening in the crypto world that you kind of have to watch and say, hey, is this going to impact it negatively or positively? And then based on that, am I going to put some money into it? Like I said, we were investing at $8,000, and it's fine because it's still making some money. And then there's something called a halving that's coming up. It'll be, I believe, in May, where the miners, every 4 years, the miners get half of the amount of money they were making before. So, 4 years ago, I want to say it started at $25, now it's $12.50. 4 years later, in 2016, now it's going to drop down to $6.25. But every halving, if you look at the graph so far, they've gone up in price significantly. So there's a lot of speculation and talk. Another expertise area that we do is we do the meetups. I use TradingView. There is a lot of, individual experts and experts on there. You can see some graphs, and then they're talking about what they think is going to happen in the space. There's thousands of people on there. But Equity Trust has the Roger report, and I do that all the time. Whenever that report comes up, I'm going to that report. I watch this video, and then I subscribe and kind of see what's going on in the space. Sometimes it's on a regular schedule. Sometimes he'll pop one in there when something happens in the space. That's a good tool to use. As far as watching the crypto space now, I've kind of pulled back because you can watch it hourly and see the changes. But it gets to you a little bit, and then it's like, you know what? I'm just in it for the ride. We're going to see how it goes, and I'm not going to check this week. I'm not going to check this month, and then go back, and it's kind of fun to see where it goes. Or you can follow it every day. There is definitely action going there. And moving it into the self-directed, like I said, that to me was another key thing. It makes it more accessible to everybody. You can literally get into the crypto space today by doing that and not have to worry so much about the path to get there.
Outstanding. I appreciate that, Robert. And you brought up some great points about halving, which is certainly a hot topic that a lot of investors are talking about as they look at the crypto markets and the potential ascension when that particular event occurs. And then also the Roger report, I appreciate that as well. If anyone on today's call is interested in getting signed up for the Roger report, to give you an idea of what that is, there's a gentleman by the name of Roger Bryant, and this gentleman is a crypto enthusiast, has a lot of education and information that he shares on crypto. And so we have Roger sort of as a third party, separate from Equity Trust, who provides education and materials and information. And he does a monthly video that is sent out to all of our investors that are part of that network. It's absolutely free of charge, so you can take advantage of that. If anyone's interested, just email us at webinars@trustetc.com. Again, that's webinars@trustetc.com, and we'll make sure that you get signed up for that. You could also check out our YouTube page. Just go to YouTube and search Equity Trust Company. We have a lot of videos on there about cryptocurrency investing. This webinar will eventually end up on there. And then also we have videos about real estate investing, various aspects of real estate investing in and outside of a self-directed IRA. So you can take advantage of that as well. Okay, great. So moving on, last but not least, Robert, if you could share with our audience a little bit about, and you started to touch on it, you know, you're already in self-directed IRA investing in real estate, it sounded like, and investing in business startups, and then you were waiting for that opportunity that a custodian would unveil, if you will, this opportunity to invest in cryptocurrency. But how did you find out about Equity Trust Company, and how did you find out about the opportunity of being able to actually use the self-directed IRA to invest in these markets?
Yeah, I mean, it's to me, again, I'm going to go back to the bootstrapping the company. I have been following Equity Trust and some other, you know, people that are in that space as well. I want to say kicking the tires a lot with a lot of different companies, one of them being Equity Trust. So when you're watching this and you're seeing it develop, you're initiating phone calls and relationships with folks, hands down, I would totally recommend Equity Trust. I was so grateful for the opportunity to get into the crypto space through a custodian. That was awesome. But all along this way, so I have over 10 years of interactions with Equity Trust, and I feel like they have always treated me right. They've always had great customer service. They made the crypto transaction, I want to say effortless. It was pretty effortless. There are some fees that you're going to pay. You're going to pay with anybody. But to be honest with you, it's worth it if you want to get into the space, because you're going to pay those fees regardless. And, and a lot of times they're higher than this. So, I mean, it seems pretty minimal. But the thing that I like the best about Equity Trust is they seem to be steady. They have always maintained a high level of customer service, and I really appreciated that. They've been around for a while, and like I said, I've kind of been following them. We have invested with other self-directed companies, but I really like Equity Trust. And then, like I said, pretty much seem to be the first in the space, and I really like that opportunity. It's like, hey, we pulled the trigger as quickly as we could as soon as we found out. So it's just a matter of watching them and building that relationship and then talking to other folks. But like I said, I would have no hesitation talking to anybody offline, recommending Equity Trust, because I have had a relationship with them and feel like they've done great. And I'm really, really happy with that relationship.
Outstanding. I appreciate that, Robert. And for all of our viewers out there, I think some of the key takeaways that I learned from Robert in this call is, number one, in terms of the research and the education that you can take advantage of. We have resources here at Equity Trust Company. Like I said before, we can't give you advice on when to buy or how to buy, but we can provide some resources and some educational outlets that you can take advantage of, such as the Roger Report. I took away the meetup groups. That's something that I'd be interested to explore a little bit further, Robert, which is, really getting the one-on-one interaction time with other investors that are in the crypto space to really get a pulse on what's going on. So for those of you that are interested, it might be a good idea, if you want to pursue that, to do some research online to find your local meetup groups that are talking about cryptocurrency investing. Or, of course, as Robert mentioned before, he belongs to cryptocurrency meetup groups as well as real estate meetup groups, and he's doing both. So I really admire that, Robert. In fact, I didn't expect on this call to get into real estate investing. That is one of our kind of core competencies here. And personally, that's my number one passion, is real estate investing in and outside of a self-directed IRA, but primarily in a self-directed IRA. And I really admire that you're diversifying outside of stocks, bonds, and mutual funds into obviously a wide array of alternative investing, from real estate to business startups to cryptocurrency. So again, a tremendous amount of admiration there. So meetup groups. And then are there any other sort of research outlets or newsletters or anything that you can think of that folks could subscribe to that might be able to help them on this path of researching the crypto markets a little bit further?
The cryptos, I totally rely on the meetup group and the experts there. And when you go to the groups, you're gonna sit in there, and I kind of start off just listening to what people are saying, and then kind of following it up with going and doing some research on my own to see if they're right or wrong. The crypto world, it is so wild and chaotic out there. It's kind of simmering down a bit, so it's becoming the norm. But the wild and chaos is really, in part, what drives the investment. And then the wild fluctuations, as that settles down, there's going to be less and less opportunity. So that's one of the things that drove us to the crypto world. It was kind of fun, and it is a wild ride. That ride is not over, but when it is over, you're going to be saying, oh, I wish I would have had invested in that space. So I would focus on the meetup group. And then now I'm not doing as much research on that. I do love the real estate aspect. And like I said, for real estate, biggerpockets.com is a great resource. You can subscribe to that for free or be a pro member. And then there are people, you'll find people in your community if you're by, a larger town. You'll find people all across the country that are doing similar things and will really help you. And then tying your IRA into that, that's a great thing. I would highly recommend Equity Trust for that transaction as well. But the crypto space, if you want to get in and start playing, this platform allows you to do that with ease.
Outstanding. I appreciate that, Robert. As we close up part one, again, stick around. Part two that we'll dive right into will be a video demonstration, and then we'll talk a little bit about the tax advantages of a self-directed IRA. So when you start looking at the opportunities investing in cryptocurrency, and as you start to take advantage of the potential capital gains associated with investing in the cryptocurrency markets, obviously capital gains outside of an IRA are taxable. And we know that the IRS and the government views cryptocurrency as personal property, which means if you buy an asset and you sell it in less than 12 months, you're going to be subject to your ordinary income tax rate on those gains, which is the short-term capital gains tax rate. If you hold it for 12 months or greater and you sell it, then you're going to have long-term capital gains tax, which for some people is 15%, and other folks it's for 20% here in tax year 2019. So when you make these trades inside of a self-directed IRA, there can be some very unique tax advantages. And I will talk about that in part two. I like to refer to it as compounding interest in the absence of taxation, which I know, Robert, your background in engineering and being a very analytical individual and taking an analytical approach, I know that that probably comes very near and dear to your heart, which is being able to compound interest in the absence of taxation, which can have a much more profound effect over many years to come. So with that being said, Robert, is there any other closing remarks or comments that you would find valuable for other investors out there in the audience?
I would say if you're hesitant at all, get into the space. Just throw some money at it to see how it goes and realize it could go here or there, but just jump in. And that's one of the things from an engineering perspective in my mindset. There's something that you might have heard of, but it's called analysis paralysis, where you're overthinking so much you can't make that decision to take that risk. And I would say you just got to jump in. And we've been jumping in, and it's paid off every time, at least in education and experience, but also it's paying off in actual money. And like John said, having it in the IRA, it's just another bonus. It's just another way it's going to help increase that dollar because of the tax advantages. So I would say jump in.
Outstanding. I appreciate that, Robert. I want to thank you again for being so generous with your time. For those viewers out there, Robert is not an employee. He's not being paid to do this. We're actually pre-recording this on a Saturday. He has a very, very busy work schedule, and he said, I can't do it during the week, but John, I'd be happy to do this for you guys on a Saturday. I'm a promoter of cryptocurrency and a self-directed IRA, and anything I can do to help out others. So this is, completely volunteer on Robert's behalf. And, I can't thank him enough for giving his time today on Saturday to record this interview and deliver a ton of great content. I got a ton of great takeaways, Robert. I know our audience is going to get a ton of great takeaways. Feel free to email us at webinars@trustetc.com. If you have questions, be happy to answer as many questions as I can. With that being said, I'm going to go ahead and close down segment 1, and we're going to dive into segment 2.